Hello, folks. It's the 9th of Feb. We've just had market open. Let's go to the 5 minutes. All right, so I am on ES. Okay, so ES, same drill. Um, what I'm going to do is I'm going to wait 30 to 40 minutes to see if I get a direction. So that's the first thing I need. So I'll come back in 30 to 40 minutes and then we'll go on to step two, which is we'll find the fair value gaps. All right, so see you guys in 30 to 40 minutes. All right, folks. Right, so step two is what time is it now? It's 10 o'clock. We have this directional move. Price has kind of moved away from me actually, so I think I've missed that. But okay, so we have this low. Okay, let me grab a arrow. Okay, so we have this low, this high. This is the 5 minutes. Yes. We've got this move up. And then step two is this is within our time box, 30 minutes. We've got this step two, 5 minute fair value gap. There's only one. Always in yellow for my charts. And then if it's green, it's 1 minute. We've got a retracement. Okay, it's very quick, but it goes into the fair value gap, right? And step three is we just confirm. So I haven't done this. Prices moved a little bit too quickly. I wasn't concentrating, but this fair value gap overlaps, which is the third thing. So if I just double confirm that with a 38, you can see how price respected that midpoint. Yes, we wicked all the way down. That's okay. Sometimes that happens, but we did respect it. So the opportunity was here to take the measured move. Now I have missed this. So you can see on the 1 minute, you can see that rejection that I talk about. Um, I've kind of missed this, but uh, let's see if I can get. So we'll see. Let me see if I can get a small retracement back into this fair value gap, and then I'll consider it. So I'll just sit and wait, and then if we get a small retracement, but all that is left now is just experience. So we've gone through the three steps in my model, right? So it's a two-step model. I used to call it the fib model in older videos. It's just three steps, so three things that you're verifying. It's a framework, so I can take things out of it and replace it with something else. For example, I can take out fair value gaps, or say replace that with order blocks or something else, right? The key is that just follow the steps, and you have to do them one at a time. So I've got my direction, I've got my fair value gap, and I also have my overlap. That's it. So at this point now, it's just experience, and what I mean is this is where you start to manage. I start to manage trade. Trade management basically, entry, exits, stop losses. That's it. This is all now experience. Nothing to do with the model, just experience. The model has told me what's happening, so now it's just experience. I have missed it because I wasn't concentrating. So I'm just gonna wait and see if I get some pullback, and then I'll still take it. Stop loss will be below that level there, um, or below that level there. So let's see what kind of pullback we get. We may not get a pullback at all, actually. So uh, let's wait and let's see. But the only thing left here is just that's your measured move. So that's where we're expecting price to go. Okay. That is pretty much it. Let's just double confirm the points. Yeah, 33 points. right? I'll put an alarm there. Let's see if we get a at least some pullback back to this um, fair value gap. All right. See you soon. Okay. So what time is it? It's 10:10, and we had a little pullback, so I was able to get an entry. Right. So the final jigsaw is just a measured move. So I'll put my stop loss just below this, just here. Looking at the 1 minute, it was just below some down close candles. Every trade is different. I use roughly $500 to about 2,000. It depends on the trade. It depends on the trade, and depends on the risk. Right. So this is my target. This is. I'm just going to pull my TP right there. So I am targeting uh, not the biggest trade in the world because I got in a little bit late, but $800, 400 risk, right? That's why I put my stop loss here because I just there wasn't really a lot in terms of the upside. I just got in. I got in really late. But I used this 1 minute fair value gap as an entry when we got that retracement. So that's it, folks. Once we come back, we'll see if it hits the TP or if it hits our stop loss. But that's the two-step. It's 3 steps. The two-step is the model. The 3 steps is the steps inside the model. And all I do is just follow those steps, and the rest is just experience, right? Your entries, exits, the rest is experience. But for the model, I use a measured move. So that's 100% of the directional move, which is this. If I can grab it, this low to this high, projected from this low. So we're targeting this high. All right. I'll see you soon. Hi guys. Sorry, I didn't realize I was recording there. It's 10:15 a.m. We are very close to TP. My trade is safe. So wasn't really expecting much this Monday, to be honest. But we delivered pretty quickly, and that's really the model in a nutshell. I built it to be really simple for me to suit my personality. So again, just to summarize, it's only 3 steps. Find the direction first. So you have to verify direction first. Without direction, you can't do anything else. Once you have the direction, yes, the market can lie to you, but that's what step 2 is for. We find the fair value gaps in that direction, and then we uh, make sure that that fair value gap overlaps with a fib. Once we have that, we have the basis. I have the basis to then make a experienced decision to enter a trade, right? That's where your experience comes in, right? You've seen everything. Everything looks good. Now you just decide to execute. Sometimes you'll see things that are really good, but for whatever reason, you don't execute. That might be because of the really high time frames. Like I said, I don't use the higher time frames in the actual trade itself, in the actual session, but I am aware of them, right? So I'm aware of what the weekly is doing, the daily is doing, the 4 hours doing, those levels. I'm aware of them. I'm just not using them in the specific, necessarily in the specific session to make any real decisions. Okay, but sometimes you might be very close to a level and you just decide, right, you either want to wait for that level to break first, or you want that level to go deeper, consolidate, and then you get your entry from there. I hope that made sense. So yeah, short video today because price moved really quickly. I'm going to close out my trade because we are good enough to the target. Like I say, you want to either hit your target or close enough to the target or good enough to the target. All that's good because I can repeat this tomorrow and then the next day and then the next day. So there's no urgency to like hold on to price to like 100% hit your target, right? There's no need. If it gets close, that's good enough. So hopefully you got something out of this video. I will see you guys in the next video.